Hi, this is Vijay Bambani here, and in this video, I want to discuss with you the possibility, I'm referring to the word and emphasizing on possibility, of why your LPG gas cylinder might just cost a little more in the near future. You see, oil and gas are not just commodities, they also involve speculation. They involve politics, they involve geopolitics, terrorism, and it's also about relationships between various countries and the pulls and pushes that are resultant thereof. Recently, the Iranian top nuclear scientist Moshen Fakhrizadeh was assassinated in a surprising and daring technological, techno-savvy attack using remote-controlled machine guns and self-propelled vehicles, etc. Now, what can be the fallout of this assassination? Remember, in the beginning of the year, we had seen a drone attack on an Iranian general, Soleiman, and the spike that came about in crude oil thereafter. Is there a trade? Can your LPG gas cylinder cost more because of this? I take a look at these issues in this video. You see, Iran and India have had ties that go a long way in the business of oil and gas exploration, and India has been sourcing oil and gas from Iran for decades now. ONGC Videsh, which is a subsidiary of the listed company ONGC, discovered an oil and gas field in Iran called Farzad-B. This was way back in 2008. Naturally, ONGC wanted rights and access to the oil and gas that were basically drilled out of this well. ONGC and the Iranian government have been negotiating for a dozen years now without a resolution about this subject. The Indian government had also agreed to invest 11 billion US dollars for the development of this field and expected a return of 18% per annum as a reasonable rate of return, which means that the Indians were asking for a discount on the oil and gas that was pumped out of Farzad-B. The Iranians, of course, have been refusing. Now, a couple of months ago, I recorded a video about how Indians should react to the Chinese companies putting their foot into the door in Iran and grabbing oil and gas drilling contracts. The Chinese, in their own aggressive style, have basically tried to circumvent the US sanctions on Iran and gas business by bidding for piecemeal portions of the drilling and exploration contract, which means one company would bid for, say, the transport of oil and gas 200 meters from the terminal to a close by hub. Another company would bid for another 200 meters, and no company would have more than one contract, and all these companies which were bidding for Iranian oil and gas contracts would be non-government entities, which means the government of China can deny any culpability or responsibility for these companies, and therefore it was above board. It would not invite any kind of US action on China on a government-to-government basis. This means that India loses out on these contracts. Now, if Farzad-B goes to China, which I suspect will the Chinese will get more than this just one contract. They will basically try and step into the Iranian oil and gas industry even more aggressively than they already have been, because the Iranians will basically blame everybody, including Israel, and by the very nature of the recent cozying between the Israelis and the Saudis. Remember, the Israeli Premier Benjamin Netanyahu actually met Prince Mohammed bin Salman for tea in a very secret meeting. Stranger things have happened. Bitter, sworn enemies, the Jews and the Arabs, the Sunni Arabs, are now sitting together and having tea. Remember, Benjamin Netanyahu in 2018 actually dropped in on an unplanned trip and had tea at Sultan Qaboos's palace. Now, in a day and age where hosting a Jew, even for a cup of tea, was a punishable offense, the Sultan actually broke the ice. The Israeli UAE deal or a pact that has been signed recently is another tale of the times. And as I have been advocating for long, since last year in my articles on Equity Master and in videos in the Fast Profits Daily, I reiterate my view that OPEC as an entity, as a cartel that determines oil prices and more often than not tries to artificially boost up prices by creating shortages, has a very limited shelf life now. I've written various articles in the media, including Equity Master, and I have forecast that OPEC will be dead within a decade. Or if it is alive, it will be too insignificant and too weak and powerless to drive up oil prices. Now the Iranians will basically blame the Saudis and the Israelis, and it will basically also go back on its commitment to curtail oil output, which has been the pact that has been adhered to by the OPEC Plus in Vienna. So it will break the ranks, and as I have forecast many a times in my articles, the oil market will now get fractionalized. Instead of OPEC and non-OPEC, there will be OPEC, non-OPEC, the Shias and the Sunnis. The Sunnis will be pro-America, the Shias will be pro-Russia. And the Chinese will basically try and buy oil wherever they are able to get it cheaper without actually taking sides. They'll play both ends of the stick. What will really happen where gas is concerned is that the Iranian gas is of high grade, yields higher calorie value, and the Iranians might just sell lesser and lesser gas to India. Which is why I said your LPG cylinder might just become a little more expensive. And I use the word possibility. How much will it actually go up by depends on how much gas will be choked off from the Indian supplies. But this is a very, very clever Chinese ploy to A, get discounted oil and gas from Iran, and B, deny discounted oil and gas to India. This is what I fear might just happen. So is there a trade? My gut feel is yes. I think in the absolute near term, if oil and gas prices in India, especially gas, was to go up, it would present a short selling opportunity for the weekly cash alert subscribers on two grounds. Firstly, Christmas and New Year times are typically times when gas prices go up and also peak around that time. And with this additional trigger from Iran, there is a possibility that there would be an immediate and a short-lived spike up in gas prices. By short-lived, I mean from a couple of days to a couple of weeks. This is when discerning traders can sink their teeth into the flesh of the trade and basically try and exploit this opportunity. I will continue to keep my ears to the ground and monitor the geopolitics of the region as I have been doing it for you, and you're accustomed to hearing these views from me in these FPD videos. On this promising note, I bid goodbye to you in this video, not before reminding you, if you're watching this video on YouTube, please click like on this video if you liked what you saw. In the comment section, do let me know what you think about this video and what you would want me to record next. Also, click on the bell icon so that you get Insta alerts for new videos being uploaded here. Help me reach out like-minded investors and traders who look out for knowledge-based investments and trades by recommending my video to your family and friends. Friends, do take very good care of your health, your family, your investments and trades. Have a very profitable trade ahead. Vijay Bambani signing off for now. Thank you for watching. Bye-bye. Do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.